Hey guys, Mike here. So, oh boy, the weekend is already starting off crazy because I have a sneaking suspicion the futures will open up green. Could be wrong about this, but I'll show you why. Of course, and when I say crazy is because you got these headlines coming out of Washington, D.C. right now, and the crypto market is reacting very well to it, which, of course, if you look at what happened Friday, what I tell you in Saturday's video, the altcoins started surging 10 to 15% before the market started to turn. And you're kind of going, wait, what's happening? And sometimes you see that where the crypto market will turn and then the stock market follows right behind it, okay? But this is, it's just an algo-driven bounce. It's a bounce we're getting because it's no surprise, because if you paid attention at all on Friday, we're bouncing off 50-day moving averages. We're bouncing off 2 to 3 year trend lines. All this stuff is happening, okay? So that makes sense. We're going to see if it continues forward, and it was what people would call a bear trap or not. Now, a lot of this hinges on a couple things. One, the government's floating 3 bills, the Senate is trying to get the government back open. Now, of course, the one thing they're not addressing is healthcare. That was interesting. They have 3 different bills the Senate's putting out that's been drafted. None of them address healthcare, which was one of the main things that was holding this whole thing up. So we'll see, if the Democrats are going to fold like pup tents, which they usually do, and then, open this thing up and we get going. And like I said, that will take away a lot of different uncertainty away, because now the airlines will open back up. The FAA will have the people to man it, and you'll be good to go, right? Kind of just takes that away. So we'll see if that's going to be the case or not. And then we'll get into some of the stocks for sure to look at. One, which had a tremendous rebound on Friday, which I'll highlight. 2 that are just look like death right now, and they need some major, major help. And I know you guys asked me about these stocks, so I'm going to cover them for you. But again, let's get into what I'm seeing really quick and why here. So you see in the crypto market, it's bouncing. And when the headlines came out, and I'll show you the 2 headlines I'm talking about here, you can see immediately, you see the candle, right? Ethereum reacts up. And of course, what are they talking about? 50-year mortgages, which I'm going to talk about, and 2,000 stimmy checks. I don't know why this meme made me laugh, but I don't know why this person put this out, but it was like, what the heck is that? I don't know if they were trying to signify the stock market, people signing 50-year mortgages. I don't know what they were doing there, but I hope the raccoon's okay and stuff. They're pretty tough animals, but I've never seen anything like that in my life. I don't know if it's an AI generator or not, so let me know if you do. But, first of all, let's address the 2,000 stimmy checks. Okay, there's no plan in place for this whatsoever. It's interesting they're trying to do it now because, remember, there is the Supreme Court is hearing a case right now on whether tariffs are legal or not for the president to have done what he did, right? Because it's clearly a tax. We know it's a tax. Well, if it's a tax, it has to go through Congress. They have the power of the purse, okay, to do that. And so, and one of the Supreme Court justices said, if we rule against you, you're going to have to reimburse all this money, and it's going to be a mess, right? And they said, yeah, we would. So just imagine if they actually do try to get this money out, which, hey, I doubt I'll get it. I doubt most of you will get it. I mean, we know how this whole thing works, where it's like this group gets it and everybody else, you get nothing. And then you're out because you've had to pay all this different money that the companies have passed on to you to buy the same goods and services you've been buying for a couple of years now, right? But, it'll be interesting. They send the money out, and then the Supreme Court does rule against them. And what that would mean is they would have to reimburse the companies, not us, because we didn't pay the tariff. We just paid the increase on whatever the prices is the company passed on to us. The companies, you might own a company that had to do this, they're the ones that pay the tariff to import the goods that we bought, okay? So they have to reimburse, I don't know if it's $1 trillion, $2 trillion, I don't even know what the number is now, but they would have to reimburse them, okay? So not only would the debt balloon like crazy because they had to reimburse them, but then they sent all these stimulus checks out as well. And so it's going to be a fun thing to watch. I mean, if they want to send, I told my wife, hey, they want to send us $2,000 stimulus checks, no problem. We know where we're putting ours. You know where you're putting yours. That's why the market's reacting, because it's like, ooh, the algorithms are like, stimulus. Ooh, what is that? Liquidity. All right. What's the market care about more than anything else? Liquidity, not fundamentals, liquidity. Okay. So they hear that and it's like, ooh, now the 50-year mortgage. Young people, if you never want to own your home, that is just fine. Okay. But let Uncle Mike do a little research for you on why you never want to sign a 50-year mortgage. Look at this right here. It took me about 30 seconds. If you look at an amortization table, all these numbers will be the same stuff for the years. I want you to look at the amount of principal that is getting paid every year in a 20-year mortgage. Look at year 10. You're up to $13,725, right? But look at the columns above. That's all the principal you're paying in. Remember, they front load a lot of the interest payments, okay? So the first 4 or 5 years, a lot of interest is being paid. But eventually you would, own your home outright if you just kept going and didn't refinance your home. Now, let's just change one number. Let's just change this to 50 years. Look at the amount of principal. It's almost non-existent. Everything is going towards interest. And this right here is the best case scenario. Why? Because the interest would be higher on a 50-year mortgage. Because the longer the contract is for, the more risk the bank is at. And so they're going to charge you even more interest on that. So that's best case scenario for you. But it's not actually reality. It's going to be much worse than that. So if you're good with never owning your home and just basically paying the banks, the interest, that's fine. But the reason why they're doing it is because the first-time home buyers, as a percentage of all U.S. home buyers, is down to 21%. This thing goes back to 2003. I mean, last year was 24. It's abysmal. We all know this. We understand. We hear it all the time. We discuss it on this channel. We don't try to hide nothing. That the younger generation is screwed. And there's a reason why they're mad, right? Because they are paying way more for these college educations than I ever did and you ever did. If you're my age, that is. And on top of that, the houses are so much more expensive. The rents are so much more expensive. Everything. They're just like, what in the heck? And then so I showed you that stat about college grads, let me say this the right way. Male college grads, right, being 7% unemployment. 7%, that is insane. Like, that number is floating around a lot right now. Would you be upset? I know I'd be upset if I paid all that money for a college freaking degree and I'm looking around going, where in the heck is my job? And then, wait a minute, I got to go live at home with mommy and daddy? Oh, no, thank you. I forgot what they see. It's the large percentage of people now are like from the age of like 18 to 28 or something living at home since like the Great Depression. And I know for a fact that's happening because I know people personally where their kids still live at home. These are kids that graduate college, they're hardworking, they're smart, and they're like, where's the job market right now? Like these entry level jobs, where is this at? And it's sad, man. I feel bad for that generation. I do. Luckily, they'll inherit a lot of money, hopefully. But yeah, it's a mess right now. I don't blame them for being upset at all. Now, looking at the stock market, percentage of stocks within the S&P 500 outperforming the overall index over the past 3 months, 26%. The other two times that looked this abysmal was a 2022 crash, and right there at 23%, we were down 13% in the market, folks. Right now, we are down 2.5%, which will probably be less than that as we open up tonight. So just think about that. The breath is that bad that normally you're not 2.5% from all-time highs, you're down double digits. All right, I mean, that's what we're talking about here. So you're like, well, that's interesting, but it just goes to show you what I'm about to discuss in just a second, how concentrated the market is. The Qs, what happened on Friday? What are we doing? Hitting this trend line right here after filling all 4 gaps, boom, bouncing. Okay, this goes back to like May, I believe it is. And so you got that right there happening. You go over and look at the moving average. Where's the 50? Bam. Came down, hit the 50, got right below it, and we bounced. Now we're closing above on the 50. You look at the SPY, it's almost identical. And we'll look at a challenge in a second. Came down to 50 as well. It's above it, okay? It's in that area we talked about, which could end up being resistance right there. And then you'll see this channel floating all over Twitter right now, where it actually broke out of this channel, which goes back to May, but then closed right back above it, came down to that support area. So that's where we're at right now, okay? So we just got to get above all these different kind of resistance levels now, which is going to be this line right here, then the previous all-time high. That should be resistance coming back up along with that trend line. But again, if we can start moving back up and breadth starts improving, and then your MAG 8, which we're finna talk about, because they're in a lot of discounts, a lot of bounce areas, moving averages are coming into play as well. If they start moving, we know what's going to happen to the market. We know what's going to happen in November. If not, that candle will get taken out. If they really want to do it, just watch 653 to get taken out if they really want to push us down. But right now, what happened? NVIDIA come down to a trend line, coming back to June, got the bounce. What else is there? 50 moving average, major discount, golden pocket. And this is one of those ones that doesn't report this week. It'll report next week, okay? Which a lot of people will be looking forward to. Also, if you pull the 50 moving average up on it, it hit its 50. Microsoft, another one in a major discount right now, breaking through these trend lines, just fast move back down, okay, from 552, sub 500. This one didn't get like a crazy wick bounce, which was interesting. Most of them did, but it did come into support, okay, and it is in a discount right now. And so this is what you're looking for. You get these areas, like I told you the other day, they can be in a bounce point, and it's a bounce for now. We just got to see carry through. Same as we break support levels going down, we got to start breaking resistance levels going back up. But these can do it quickly if the Mag 8 starts really pumping. And then look at Apple. Apple didn't do anything. Apple's like, what sell-off you talking about? I'm good to go, man. It consolidated 5 straight days right there. What's it on? This trend line right here. It didn't come in no kind of discount. I mean, this thing just like laughed at the market. So you can see if we get weakness, that's an if, around that 259 area, I believe it is, be previous all-time high, which has been resistance before. Flip that into support, or does it just start bouncing from this trend line? Again, selling phones and buying back stock is the way to go. Now, Meta finally filled this gap. Got a nice bounce. Went from like 598, I believe it was, to 621 very quickly once it filled that gap. So we've been talking about it. That was also the golden pocket. And again, this one's down at 25% area. It wasn't exactly 25%. It was 24.7%. But that 25%, man, anytime you see a heavyweight like this come down at 25, you usually get a nice bounce. Now, this is one that everybody's looking at because they're taking on loads of debt. That's the reason why this has been selling off for a while and sold out after earnings and all that fun stuff. They're not just doing a bond sale. They're doing like off-book stuff too, trying to raise money for this AI build-out. And so it's a whole different ballgame here with them. But again, it's still a heavyweight. So it's getting a bounce. A lot of people are trying to say, okay, is this it? Let's see what happens here. Let's see if we start building out some market structure with higher lows, higher highs. We pull it from that low to that high or that high to that low. You can see right there, 636 is going to be the level we're looking at, 662, 672, okay? That's what we're looking at when it comes to Meta. Amazon came down, broke through the previous all-time high, but had a very nice bounce right there at that last high. So it was a nice little suck-up move from 242, 246, all right? And again, this has been a huge move. And this is not, you know, Amazon's not a high flyer. You look at the chart. It's not a Tesla. It's not an NVIDIA. It's not an Avgo. Nothing like that. Okay, I can't even say it's Apple anymore, to be honest with you, because Apple's been doing crazy stuff. But again, this one right here, because of its cloud, has been getting a lot of hype, okay? But that gap, we knew some gaps were going to fill. Let's see if the whole gap's going to fill. We get a bounce, start moving up from here. Tesla, again, filled that one gap, came down, almost mitigated this entire daily fair value gap. That's why we mark them on the chart. That's why we never leave them out, because this thing hunts liquidity like crazy on these imbalances. And so, again, it's in a discount, right? It's below the 0.79 fib. There's a lot of liquidity below. So if it ends up coming down, 398, 402, where your next level's at. But if it turns back up, just watch between 451 to 458 right there as the next search out as far as liquidity is concerned. That would, if it turned from there, be another lower high. So watch out for this one. The pay package got approved. And, you know, again, obviously a sell the news event for this one because it did sell off, but he got his $1 trillion pay package. And it has nothing to do with cars, folks. Everything about robots and all that good stuff. So that's what you got to see. But, you know, why are we covering these? Because the market can't move up without them. All right, Mag 7, not 8, Mag 7 make up 36% of the S&P. It was only 10% a decade ago. If you include Avgo, it's almost 40% now. Now, MP, miraculous recovery. This thing was selling off like crazy. It hit this area, which we had marked out right here. And we said the 49s, right? We got the 49.64 and had a 19% recovery. This thing started recovering before the market started recovering. So big bounce up, a lot of big buyers stepping in right there. Again, it was down, I think it was a magic number, 50%. Went down 50% in 21 days. So big sell-off. And what are you looking for? Just market structure. Does it come up and this is just another lower high and we start rolling back over or not? That's the big thing. We've passed earnings. We passed government investments. We passed all that hype. But it didn't come down as 200. And so just an amazing push up. So buyers were definitely sitting there. So mark that level out if you don't have it marked out. But again, just mitigate that weekly fair value gap. I always tell you to mark those on your charts because it's going to seek it out when we're coming down and when we're moving up. Then you come over to UNH. This one right here has just been selling down and selling down. But you can see it's coming into an area now. Right here, you can see it. On that visible range volume profile, it's coming down to these anchor VWAPs right here, coming down in these support levels between like 303 to 312, somewhere in there, 315. And so that is a good bounce area to have. We zoom in, you can see it bounce once it hit those, but it can come down farther. So be very aware of it. This has been a nice sell-off for UNH. And we'll have to see how it reacts. And if they don't renew or extend the healthcare subsidies, I don't know how this one's going to react, to be honest with you. It might come down even lower at that point in time. Somebody asked about this. I mean, this is just death. This thing needs like Bitcoin to go on a major run. It's broke major trend lines. All right, this trend line right here, which I talked to you guys in the Saturday video like weeks ago, and I said if it breaks that, watch out. It goes back all the way to 2021, and so you know, and it breaks these trend lines as well. So it really needs some help. All right, to start moving up. And you can see why in the visible range of volume profile. What are we in? We're in a gap down there. You can see where support is around like 193 to 202, and so it can definitely drop down there if Bitcoin don't get going. Yeah, this thing is going to continue to come down. So it really needs Bitcoin to start turning around right here. HIM's another one, broke a 2-year trend line right there. It's on the weekly, but came down to support at 40. Okay, held right there, but this is another one. Seems like no matter what's going on, this one right here just keeps going down for now. And again, it's one of these ones that can bounce up 30-40% very quickly. It is at the golden pocket right there into support. There's another weekly fair value gap below. So if it wants to come down, it absolutely can come down. I thought with that news coming out, with all the weight loss stuff and, you know, that the president was doing, you get a bounce off Lilly even more, or maybe I think it's NVO or whatever it's called, to sell the weight loss drugs, HIMS, but you know, any bounce, especially on this one, just didn't hold. And so we'll see if we can get back above this trend line and go on one of those like 20-30% runs coming up, but it needs to bounce. It needs to bounce soon. Now, when it comes to earnings, we got some high flyers, man. And I'll show you the moves on these. It's crazy. You got Rigetti, which is RGTI, CoreWeave, BBAI, AST Mobile, Plug, TerraWolf, Oxy's Not. And then on Tuesday, you got Nebius, C, and then after hours on Tuesday, you got Beyond Meat, Oklo. And then on Wednesday, you're going to have Circle, which has been getting absolutely obliterated. And then in the afternoon, you got a big boy like Cisco reporting. Thursday, Walt Disney, Bitfarms, JD.com, Billy, PaySafe right there. And then you got Canadian Solar at the bottom. Solar's been doing really well. It's been very quiet, but it has been. In the afternoon, Applied Materials, NU. I can't believe Virgin Galactic is still in business, but it is, I guess. I haven't seen that chart in a while. Luminar. And then on Friday, I don't really see anything to speak of. And you look at these moves that are expected. I mean, wow, 16%, 16%, 17%, 16%, 14, 15. Look at Beyond Meat, 30% move expected. Cisco 6, SE's 11, Disney's even almost 8, which is kind of interesting. I didn't think it'd be that high. And so a lot of big moves. And then, of course, most of this is tentative. If they can open up the government, it won't be. You can go through this if you want to. Again, the only thing that's not tentative when I'm looking on here is the 10-year bond auction. What else we got? Nothing. I mean, everything else is just tentative. And this is important, right? Because we hadn't seen some of this data in quite a while. I can't wait to see what the unemployment rate is. Actually, they don't come out this week, but it'll be coming out here soon. So I'm hoping they get open so we can really kind of see this. And I don't know if they're going to release any of this, you know, PPI data or CPI data. I don't know. And so we'll have to find out. So anyway, hope you guys got some out of it. Please hit that like, subscribe button. Let me know what you think the week's going to be. Whether you think it's going to go green, just go crazy again, or is this a whole fake out back to the upside? So thank you for signing up for the membership. Less than McDonald's combo at $7.99. That's everything you get with it. Just hit the first link in the bottom of the description. Thank you for all you guys' support. I really appreciate it. And I'll see you tomorrow.